Yeah, sorry for the delay. Just mopping up some pound. Hey, yo, you know this kid? I said, I didn't, but I know he did. Hey, trading is risky, not appropriate for everyone. Your past performance is not indicative of future results. Never risk money you cannot afford to lose. Excuse me. That banana bread, man, going down the throat wrong. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, a lovely ECN that offers not just Forex, but energies, metals, indices, binary options, and everything else that's lovely. We do these trading sessions every day at 7:30 in the morning at Forex.Today, Monday through Thursday, and at FXStreet.com on Fridays. In fact, this Friday is my 113th month of trading non-farm payrolls live. And it's been long since the most popular Forex webinar in the world. So I hope to see you there. So today, how about some technical analysis? Yep, these sessions are hosted on Forex.Today, so that's where you went to register, to log in, but the videos are also archived there, so thank you to Forex.Today. So let's get started, huh? Dun, 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 dun. Forex trading ideas for today. That's the website. That's it right there. Look at all those trading ideas for today. Forex.Today. Awesome stuff. Lovely. Lovely to your mum. Hey, this is the pound. It's dead. Ha ha ha. Nice. Man, it's been a beautiful trade. Me still happy. Hey, hang on, man. I'm coughing and sneezing silently here. Yeah, must be allergic to the British pound. Yeah. Hey, check this out. You change the pound by a multiple of 4 is from time. So you go from 15 minutes to 1 hour. And the 200 EMA on the 15 turns into the 55 EMA on the hour. Lovely. Now, every pullback to the 55 is a red flag that the downtrend is slowing. Man, I'm struggling to stay alive here. Hang on. Don't want to die on you, right? Especially in the middle of a video. Who's going to upload it to YouTube? Too many. Maybe not enough. Hang on. Yeah, no, I think it's the wine, not the cigars. All right. So here we go. The 21 was in control. British pound's been falling hard and fast. Does anyone remember why? Let's go all the way back. I know I've covered it 10 times. Is it this chart? I don't have it on this chart. I have it on somewhere. We're trading this, guys. We shorted at the 50%-ish. Okay. I have it on a different chart somewhere. we're down here now. We've been shorting this since 58. It's 51.50. So we're just on our favorite rocket ship, going on a trip. My favorite rocket ship? I don't know if you have kids. Anyways. Little Einsteins. So we're sort of in this move here. We're on like the 19th wave. I don't know if Elliott wave goes that far, but here's a retracement back to the 3A2. Lower low, lower high, lower low, lower high, right? Into support. Hesitation. Lower low, lower high, lower low, lower high. And now we're in hesitation again. Now, when price is below the 21 and 21's below the 55, right, this cross here, you fire for effect. You're aggressive. There's nothing in the world that can stop you. You are confident this is falling. Now, when you start to consolidate and pull back into the 55, you're still bearish, but you're a lot less aggressive. In fact, you're pretty concerned about things like support, where we are now. Now, if we break support, which the oscillator is suggesting we may, and we might be doing it right as we speak, then we will continue the process of selling rallies. Okay? You got it? So it's been a blessing. It just keeps falling. Every time it goes up, it just keeps falling. Right? So we had this sort of consolidation test here. Never made a higher high. Probably got you worried. Then we tested this one. Still never made a higher high. Now we're on support. So what might happen? Of course, it's pretty late for you to be doing something now. But the next step might be something like this. Because, again, the 55 is in control. I don't know if we're actually breaking this or testing it. But if it does go down to 51, I'm hoping that we'll have an opportunity to do something like this. Something to that effect. Maybe not those exact numbers, but something to that effect. Hua? By the way, when I say hua, you say hoorah! Oh, all right, so let's go back to what I have done. This is what I did for you guys in June. We set this up in March. And we're in this, you're right? And then just last week we were in here, which is a lower high of a lower high of a top. We make the lower low, which predicts a lower high, which then predicts a lower low, which we are now doing. And we're just in this little area here. But I'll remind you that our target is something like, below 50 anyways. So if things go well, of course they don't have to go well, but if things go well, there's another 150 pips in this move. Okay, and to refresh, everything, that's the big move. And again, set up in March, tradable in June, September 1st, is probably another good trigger date for this thing. The third week of August is probably, and everyone knows the third week of August, right? So that's probably the third week of August. And then this is the move that we've had planned out for months now. I mean, like 6 months. Right? Everybody agree? Right? That's actually been the plan for months. All right. Well, you can take two things away from this. A, I'm a genius, or B, it's predictable. I would say it's predictable, or more importantly, let's say tradable, because you don't really know if it's going to do it, but that's what the analysis might suggest. Now, Chaba said, why is it falling? Well, because it's going to rise. It's similar, like, why does the Euro USD go up? Well, because people are done shorting Euro USD for a while. So some folks have been betting that the Bank of England's going to raise interest rates, and they get ahead of themselves. Okay? They started betting in here. And then they're like, oh, what? It's not going to be this year? Oh, man, it's going to be next year. So, you know, down in this area, this zone here, this might actually end up being a buy zone. And I've already predicted, you know, and then outlined clearly, I don't know, a month ago, I outlined clearly why I think several months from now, the Bank of England will consider raising interest rates seriously and maybe actually do it. And then I outlined a month ago why I think in January, February, March, why they'll do it, or why they will suddenly have the power to do it if they want to do it. So again, it's sort of like thinking ahead. Or maybe get your lot. I think traders, and I'm guilty of it too, traders can wander in hopeless night, right? Through the forest, in the dark forest, is wandering. And you forget there's a forest. You're just lost in the dark, right? They're just like, trees, man, everywhere, trees. Which is the opposite of what you've asked me to do recently, and that was, you know, let's trade the 1 minute chart. All right, I can trade the 1 minute chart all day. But sometimes you get lost in what's happening where you just go to here and you're like, oh man, should have just shorted and walked away for a month. Which one do you want to do? Make 19 trades a day or 1 trade a month? I've shown you both. I was once at a poker game, believe it or not, and playing poker, and the person next to me, a reasonably young, reasonably good-looking young woman. Hey, nothing wrong with that. She was actually playing very well, so I strike up a conversation. I'm like, hey, so what the hell do you do? And she's like, oh, well, I just graduated from college, blah, 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 blah. I got all this unbelievably high-end education. And I'm like, wow, groomed for something big. And she says, yeah, well, I actually have a fairly wealthy family. And I'm like, oh, well, what do they do for money? And like, oh, it's old money. So all they do once a year is place a trade on the foreign exchange market. I'm like, wow, I'm a Forex trader. I'm like, no way. She's like, yes, I'm being groomed for that. I'm like, so you do what? Yeah, we make 1 trade a year. Nice. Felipe wants that, right? I'm like, how long have your family been doing that? She's like, 5 generations. Nice. Well, my uncle did. I'm taking it over from my uncle. My uncle took it over from my dad. My dad took it over from his dad, and so on and so forth. And I'm like, what? Yep. We just put in a huge chunk of family money, and we live off the proceeds. Nice. Yeah, totally. Hey, Ron. I'm like, well, that's good because I won't feel bad taking your money. Read them and weep. Full house, baby. Go all in on the next one. Isn't that funny? But so all of this can be done, and all of this is done, in fact. Okay, so just imagine a carry trade, and a carry trade year where the yen is probably going to be weak, and let's say the New Zealand dollar, which is an inflation targeting central bank, is like required by law to raise interest rates. And you're just like, oh wow, we're entering into an inflationary cycle. New Zealand's going to raise interest rates, and the yen is still going to be deflationary because it's been deflationary for 30 years. So you're like, all right, I'm going to put in 100 million, trillion, billion, $100 on the Kiwi yen and walk away. Now, of course, you could gamble it that way. I doubt it was really one trade. It was probably one trading idea what that family would do. Let's say like sell the euro. But like I've been teaching you, you can do that with multiple trades, tiptoe into it, and move your stops, and then move your stops in such a way that you're probably not going to get knocked out, but you don't want to go all in either, right? Because that sounds crazy too, right? So you got to do it in a smart way. So this goes all the way back to a conversation that we had, what, last week, early last week? What's your marketable idea? You're a hedge fund manager. You want to ask a billionaire or a millionaire for some money. And they're like, well, what are you going to do with it? And you're like, actually, I have no idea. Well, you're not going to get it. So what is your idea? What are you going to do? What's your alpha, baby? Oh, well, I think the euro is going to crash below parity, and I have nine reasons why. Let me show you. Great. Sounds a hell of a lot better than I have no idea. So at least that family had an idea. Now, here is a trade that, set up, and you had, I don't know, a day or two really kind of get on the gravy train and then stay with it. Or the other way of doing it is just, sell the hell out of it over and over and over again, right? But then you have the issue of how do you exit. So just remember, that's what multiple time frames are. It changes the strategy. Risk management strategy included, right? Cool. So it's been a long time coming. So we are near-ish support, and we are consolidating like one would expect. Right? You can see here we've been stuck here for 2 days. But if it dips below, you might want to sell rallies on the 15. What? Why? Because it's going to drop to 50. It's going to drop to 150, right? But I remember this thing being like, what, 250? How high did this actually go? Yeah, 210, yeah. I was there, Baba. I was there. Amazing stuff, huh? So look at, I have you on a 50% retracement of this, which is simply just a lower low in a presumably, downtrend. So you can see it's not that crazy. And then if we hit the target here, we're just going to double bottom. But it's one of these things when you mix the technicals and fundamentals, I'm like, I don't think we're really going to go that far. So let's just play off the cycle level. Let's go down to 48 and then buy it back. Is that right, Kenny? So it's amazing how this looks like such a big macro trend, right? And you're like, Wayne, that's just too slow. I can't trade that. And then I just back out a little bit more. And you're like, well, there's a macro trend too. And look how awesome it is. It's just simply a lower low. So what do? You sell the lower high. And that's all I did in March. We got the lower low. Let's set up for a lower high and then maybe a lower low. And so far, lucky dog. So what I'm trying to show is it's really, it's not complicated. It's probably, if anything, oversimplified, but that's what I like. Because I'm trying to show you, you don't have to be a genius. You just have to do some work, right? And then stick with it. So again, have it fall, and then maybe in January, February, March, we buy it back. Cool. Elementary, my dear Watson. Okay, so Euro, what do you want to do? Well, what's the plan? Let's see the plan here. I have this heading down to 109. I have the peak at 112. Oh, 112.82. So let's call it 113. Right now we're in a consolidating move. So when we created this plan, you can see that if I move this over, that's all it is. We had talked about this, the difference between head and shoulders and crown patterns and all these, and even Elliott wave type things. They're all in this idea. They're all in this idea. The most important thing that I'm looking at is the lower low, which we have here. So all I do here is set up the lower high, predicting the next lower low. We're right in this zone here. Yeah, it's taken too long. Cry me a river, what can I say? So one thing that you'll never be in control of, right, is the market. Let's get rid of this. Right? So it consolidates, but it has been proven wrong yet, has it? If I had my stop just above here, I'd be worried about it. And if it knocked me out, I'd probably take a break for a while and wait for the next setup. But the consolidation that we're in now hasn't been bad enough to warrant exiting, but it's pretty close. I'm looking at the chat here, and there's a question. Before I start buying the pound dollar back, will I wait for a weekly change of trend? No, probably not. Excuse me. Because the only reason I'd be buying it would be the fundamentals, not the technicals. The technicals said that this can drop forever. Okay? So the fundamentals suggest that in the near future, if my fundamental analysis of economic indicators, such as UK GDP, is correct, we will be surprised in January, February, March at how wonderful the results are going to be. Okay, so I've already talked about that. It's already in the video, all that kind of stuff. So you can learn why. But I'm already thinking January, February. So the data is going to be shocking. Oh my goodness, look at the huge improvement in UK GDP. And that will give the Bank of England the courage, or at least the evidence, to raise interest rates. Right? So at that point, if I'm at that supportive level on a daily or weekly chart, and then this type of data starts trickling in, better inflation data, better employment, better spending, better output, better stuff, especially stuff that goes into GDP, then I'm going to start buying the pound dollar in anticipation of the new macroeconomic trend, which I've already predicted based on my own analysis. So I will use technical, but you asked me weekly. No, not weekly. Will I wait for a change of trend on the hourly? 4 hour? Daily? Yeah, but I'm not going to wait for weekly. Weekly, it'll be so late, right? I've already turned my molehill into a pyramid. Be living like a pharaoh. Right? So, yeah, by then it's already happened. Okay? So that's how I do it. But notice, guys, that we could talk about my strategy 4 months from now, but we could talk about it a month ago or 2 months ago. And then I can clearly tell you why or how I've come up with such, weird, radical opinions. And how many times have I asked you to come up with a 6-month outlook for a currency, any currency? How many times? Just a 6-month outlook. Tell me what's going to happen over the next 6 months. I mean, so everybody keeps fighting me on it, right? Yes, Wayne, I know that's one of the key things to, my unbridled success and my complete independence from, right, from having to work for somebody else. But I don't want to do it. All right. But that's how I do it. So, anyways. So I'm just living out the plan, yo. Okay. So, anyways, Euro USD is going to fall. Really? Right? Really? Yeah. Yeah. So, what do? I want to sell it. Where do I want to sell it? Support or resistance? Resistance. Well, where's the resistance? Find the resistance. So let's find some resistance. Today. All right, that looks like resistance. It was a top. Where's my mouse? That used to be resistance, right? Here, let me get rid of that. Boop. Boop. Okay, that used to be resistance. Well, maybe it'll be resistance now. Okay. Well, I wonder what happens when it becomes overbought. Then I wonder what happens when it makes a lower low. I hate when I do that. Let's try that again. Okay. Wonder what's going to happen when it makes a lower low. Am I going to sell the retracement? And that's it. That's all it takes. Sell the 50% retracement off the double top in the direction of your fundamental bias when it's technically overbought in a falling market. Thoughts, comments? Was that like a slap in the face? It's supposed to be. It's like a wake-up call, right? So let's go through it again. It's the euro dollar. Are you a bull or a bear? You should know this without looking at a chart. You should know this while your computer's booting up. You're thinking, what? Well, I've asked you to do fundamental and technical bias. Fundamentals, you evaluate economic indicators. Technical analysis, you open up a daily or a weekly chart, whatever you want, and you do your analysis, whatever strategy you want. I don't care. And you decide whether you're a bull or a bear, and then I've asked you to print out a chart, write down that you're going to be a bear or a bull, and then put it on your wall. So it's not like, are you a bull or a bear? And you're like, well, it really depends, Wayne. No. Are you a bull or a bear? So you're a bear. Fine. So do bears buy or do bears sell? Come on, guys. Oh, this is so embarrassing, Wayne. Are you really going to make me type it? Yeah, type it. I want to get better, Wayne, but I don't want to type it. That's so embarrassing. You're treating me like a child. Quit fighting me. Just type it. Right. Do you sell at support or do you sell at resistance? So give me 3 levels of resistance in which you might be interested in selling. You see what I mean? Just go find it. Any time frame you want. I don't care. Honestly, just find me 3 levels of resistance in which you might want to sell. Well, that might be one. Well, the higher up one might be one too, but we're not there yet. So there'd be like one here and whatever. So let's just say 2 levels of resistance, one here and one here. But I think you should always identify 3. One where you might sell, might be selling very soon, and then plan B would be up here. Okay, so when price, or if price, touches that level of resistance, now you wait for a technical candlestick pattern, or a price action type pattern, whatever you want to call it. So it's not that you want to sell at the 50% retracement. I don't give 2 hoots about a 50% retracement. What I care about is you've identified it as resistance. You're sitting there while price is going up, and you're sitting there going, it's coming to resistance, it's coming to resistance, it's coming to resistance, in which I might want to possibly perhaps sell if I get a reversal pattern, right? I don't know. You're sitting there waiting. Then it touches. Oh, well, it actually touched to the pip and then dropped like a rock. But who knows? Things can be complicated in the zone, right? But at some point, an hour later, you're like, all right, it held. All right, it held. Oh, retest and drop. Okay, that held, which in of itself could be a lower low. But certainly an hour and a half clearly kicked off your resistance. So now what do? You're a bear. You're waiting. It hit your resistance zone. It dropped for an hour. Then you get a giant red candle, goes up about 50% off the top, which in of itself is 50%. What do? Right? So, I don't mean to make you mad per se, but I do want you to succeed. I want you to get this. I don't know. I don't know. I want you to get this so bad. Okay, guys? But see, Rick, I do think it's that easy. Right? Rick says it's not easy to find support and resistance. So, this is what I would do if I was you, Rick. Right? And I'm not just talking to Rick, I'm talking to everybody. But I would focus on that, Rick. Right? I would focus on that more than anything else right now if I was you, Rick. I mean, honestly, you might have said a hugely important point. You might have just identified something that is worth $1 million. Where you're like, it's not that easy to find support and resistance. So one thing I'm reading into it, if you did find support and resistance, well, you'd know what to do, right? You're like, well, I'll sell the lower high. Well, cool. I would master that now, Rick, honestly. I would focus on that like a maniac. I would, yeah, I'd become the master of support and resistance analysis. I wouldn't worry about anything else. So I do it all the time, Rick. So another way I could read it is, you could be saying, oh, Wayne, you're just going backwards. You're just looking at it happen. So it's easy for you because it's already happened. But I do this relentlessly day after day after day after day after. I just did it now. I'm predicting the next level. That's my new resistance. I do it on 1-minute charts, 5-minute charts, 15-minute charts, hourly charts, 4-hour charts, daily charts, weekly charts. I just showed you trades that I set up using support and resistance 3 months in advance, right? So there, and the confusing part is there's all these different levels of support and resistance, right? But I'm telling you, man, you just found your new mission. It might dominate the next 1 year of your trading. And I'm not joking, where I've spent 1 year focused on nothing but the 1-minute chart. I've probably spent a year just studying pivot points. I've spent a year probably just doing, Fibonacci stuff. And then I found in particular, it's not Fibonacci, it's where you use Fibonacci. In fact, I think Fibonacci is stupid. Oh, well, I just upset a bunch of people. Look, it's not a 3A2. It's not a 618. That's stupid. Yeah, it works out mathematically. Look, it's 1/3, half, 2/3. I think change it to 33, 50, 66 and see if your world changes. Doesn't make a damn difference. It's like, how much did it pull back? A little bit, a little bit more, and a fair bit. But sell it, for crying out loud, if you're at resistance and you're a bear. Especially if it starts falling. That's all it is. We're making things so unbelievably complicated. So honestly, again, Mike, I'm trying to motivate you, and I don't think I'm doing a very good job. But with all seriousness, master everything you can about support and resistance, and then go back and realize everything you read overcomplicated things, and really it's fairly simple. This used to be a low, you drag it across, it's going to be the new high. I'm done. Right? Which means I draw this box here. Okay? I draw it when we're down here. All I know is we've made a low, so we're over here. Nothing to the right exists yet. And I grab this and I move this over and I say, I'm going to sell the next rally somewhere around there. Somewhere around this gray box. I do this over and over and over and over and over. Okay? And it's made a new lower low. So what have I done? Let me get rid of this so it kind of lines up. Okay, we've made a new lower low. What have I already done, guys? Look. Okay, I have this because somewhere in the future, I might have the opportunity to sell that. If it comes up here, I'm going to sell it. Okay? I'm already a zone ahead. Technically and fundamentally on multiple time frames. Okay? And what I'm selling here, what I'm defending, which is important because I'll know if I'm wrong, I need to take a break, which I already told you. I'm defending the 50%, which we've already tested. So by definition, we're actually in a ranging market. So I'm still going to sell at the top, right? Because it's still not going up. It just isn't going where the market is basically sideways, but the overall trend might still be down. So I still sell at resistance. I just don't really expect it to break lower, but fundamentally it could, so I'll hope. Okay, but whatever, I'm still going to sell here. But if it did this, oops, let's do the other one. If it did this, I'm out. Why? Change the time frame, dude. All of a sudden, I'm making higher highs. I'm not interested in higher highs. So I'll take a break, and I will really wait. You know, I still think the 618 would hold, but I need the 618 to hold, and then I need a lower low, and then I need a lower high, and then I might even wait for another lower low. I mean, it betrayed me, and it's going to take a while before I trust again, right? So I'm putting everything into context. I'm still going to sell here. Like, how could that not be resistance? That's totally resistance. 100,000 billion times over. That's resistance. And a higher high than this high, it's going to freak me out because I'm a bear. But I'm a bear at resistance. So if I get a reaction like this to my resistance, look, I'm not even telling you to sell the resistance. I'm telling you to sell the reversal pattern at resistance. It's incredibly conservative. I'm not one of these coaches that says, get in there, trade, 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 sell, sell, sell. I'm risk averse, guys. I'm not a churn and burn 'em coach. Right? Trade the reversal pattern at your predefined resistance level if you're a bear. Now the cool thing is, if it went above this, I'm out, and I already know that. And I know why. So if this falls, and it should fall, because I'm fundamentally bearish, based on central banking policies, in particular, diverging central banking policies. So I am bearish. That is resistance. I did get a reversal pattern. So it's not hindsight. And I already know what I'm going to do if it comes down to here. I'm going to be conservative because we're range bound. But I think on the long run, this will head down, but I've already drawn that. And this wasn't hindsight. You see what I mean? We drew this in real time. I think this might have done a lower low, lower high scenario, and I busted this out. And none of this besides the peak had happened yet. So I still think this pattern is possible. I'm just, it should have already happened, I suppose. Therefore, I'm much more conservative. I'm still a bear. I'm still selling at resistance. I think it's going to come down here. I have no evidence to believe it's going to go straight through. I hope it will. It probably will. It certainly could. I know I wouldn't want to hope to be long. So I'm going to play it like a bear, cautious bear. But what I think will happen is we'll make a lower low, lower high, and I'll end up selling here again anyways. Okay? Okay? Aussie dollar, huh? Okay, let me zoom in. You can see I've already drawn support. Okay? Why is this resistance up here? Look, because it used to be support. I'm telling you guys, it's not hard. Here's support now. Let me get rid of the pivots. Okay. So if you were a bear, you would have sold here. And if you're a bull, you're going to defend support. Look, That used to be support now, probably be support in the future, which is now. And then if you change it to like, oh, I don't know, an hourly chart, we're double bottoming at previous support. Huh? See? And you see this line, and this goes to Rick. This line and this gray area is the sell zone from the previous price action. So lower low, which I'm showing you with the orange line. So where am I going to sell? The gray zone, which I drew before we did the retracement. So again, lower low, lower high, sell. Lower low, lower high, sell off the 21. Lower low, lower high, sell off the roll reversal. Right? Makes a new lower low, draw a new roll reversal. Okay? Look at this, higher high. Uh-oh. 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 All right, so anyways, now we're on an hourly chart, we're triple bottoming, quad bottoming. Doesn't seem like a good place to sell, does it? So you sell it even though it was over the 55 EMA. Not sure where you're talking. Sell, 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 out. Above the orange line's at 21. You definitely sell it. Fire for effect. Fire for effect means throw every piece of ordnance that you have at it and kill it 9 times over. So Mike says to him at rally to 618, good, sell it. Perfect. Lovely. Dump it. Dump it, dump it, dump it. Dump it, dump it, dump it. Do you know why we use the 21 EMA? That's where you sell. Sell it. Sell it hard. Sell it hard. Dump it, dump it, dump it. Huge retracement. Back into resistance. Sell it hard, man. Dump everything. You're aggressive. Dump it. New lower low. Retracement to the 21. Dump it. Sell it. How could you possibly buy that? You can't. I couldn't fathom how someone could even think of buying that. Right? And you know what? If I believed it was trending, I would have sold this. But what's the issue? We're at support, dude. At some point, you got to like respect the market. Okay? Okay? Is somebody going to trade this this double bottom or triple bottom, whatever you want to call it? It's one of these things. It's like, could you sell here? No. If a bear sold up here, could he take profit here? Yes. If there was a bull, would he buy it here? Probably. And it's all because it's obvious, beyond belief, even a blind person can see that that's support. It's all about support and resistance because there's orders there. There's going to be order flow. Okay? So, yeah, you're going to wait for a break of 69. Well, here's what you do. If support is broken, sell at resistance. That's it. If it's made a lower low, sell the retracement. Okay? So Mike says, like, well, he doesn't see it as actually touching support and all that kind of stuff. Then you're just very, very aggressive. It's like, I can see the support there. You could sell here and jam your stop. Absolutely. If you want to be that aggressive, totally. Lower low, lower high. But my experience have shown me over the decade that you get retracements like this. So if you're going to sell this one, you still need to get out at support, okay? Which it predicts anyways, right? So you could do it, just don't expect to break support when it's such big support. Just, you got to be conservative, that's all. Okay? So far, some, pretty straightforward setups. Is there a request for a different currency pair? Kiwi, the beast, the beast. All right, well, let's do the beast. It's an interesting one. Did you sell it off to 55 on the hourly? Where's my beast? Here it is. A couple people said, yep. All right, well, then you did it right. Let's try to figure out my thought process on the beast. Okay. Funny thing here, huh? Look how I had it drawn. And again, before, not after. We were in the reversal zone here. So I have it rising up and then falling. Look what it actually did. Now, yeah, okay, it didn't happen that day. It happened the next day. We went down, and look, it rallied up significantly. I would say I'm right here. I would say that's beautifully done. It reversed temporarily at the reversal zone. Cool. And then continued mission. Now, this drop here, is it lower than the previous low? So here's how you trade it. You highlight the old support zone, drag it across, and it's going to be your new sell zone in the future. So when you're down here, you're preparing to sell there. Oop. Cool. Now we've dropped, as we should, and as you can see, as the plan was. I got a couple of problems. Anyone think it's a coincidence that this bounce is occurring at a monthly support pivot? So it bothers me a lot. But anyways, it retraced very significantly. Do you think that is an important piece of information? That it came all the way down for weeks and then suddenly tickled the monthly support and then skyrocketed instantly. Okay? Somebody got out. Somebody got in, right? Somebody took profit. Maybe just everybody. Maybe just everybody sold it down to the support pivot. Why wouldn't you take profit, right? But anyways, it skyrockets, which means obviously someone was interested in that, meaning what do you think it took to dramatically reverse the pound yen in minutes like this? 100 billion? 500 billion? How much money do you think it took to change this? I mean, holy smokes, right? So anyways, it skyrockets up into the next moving average, which is still bearish, but you're concerned now of a higher low or double bottom. Okay? So if you're bear, you could sell here, but I wouldn't be aggressive. Okay? If you're a bull, let's talk about that. If you're a bull, do you pay attention to things like monthly support pivots? Yes. Do you like giant skyrocketing bullish engulfing candles? Yes. Would you have this set up with a fib to long bomb it off of your support zone? Yes. Now, I think it's going to be a tough game because it's still a downtrend. If I were me, I would like to have a higher high of that proportion and then a higher low before I start doing that. But that's me. Is somebody going to trade this up? Yeah. Yeah. Why? It's at support. What does one do at support? You take profit on your bearish trades, or you go bullish and buy into the market. I think the market's still bearish, so I think that's too aggressive for me, but that's me making my decision. But is somebody going to buy that? Someone already did buy it. Question is, are more people going to buy it? How many bears took profit? How many stops were hit? Well, all of these I don't really know. These are really good questions. I don't know. But I don't think that's a random walk, a cluster of weekly and monthly pivot points reversing the market. So as a bear, I think watching what happens next is supremely important to what you're going to do over the next 24 hours. If you're a bear, you sold high, your stop's probably here. Hope's not a strategy, but praying never hurts on a trade like that. Because, yes, it is a 55, but you are selling it off support. We're supposed, so anyways, you got to be a little careful. But it certainly could just head on down and keep going. It's not what the 55 predicts, though, is it? But that's why I've come up with my methodology that I teach you guys. Because after, honestly, what, 1 million trades? When I see a move like this, I grow cautious. That's why the 55's there. I have my doubts of it making a lower low. Even though, in this case, I'm still bearish, I still have my doubts. Now, in the long run, I would like to be bullish on this. But it doesn't mean I'm going to be the first one in. Doesn't mean it doesn't mean I'm so bullish that I'm going to buy a falling market. Does that make sense? So Powell says the 4 hour is not broken. Why not go by that? You can. Okay? So it'd be great if we either move sideways until the 21 catches up, or we head up for a while and then head down. Okay? All of this is good. Okay? But I think there's some pretty big red flags that say, reduce your amount of aggressiveness. Okay? That's definitely a buy zone, guys, for a bull. Ba 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 ba. So, yep, that's that. Hey, let's call it a day. It was a good one. So, peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Yeah, and again, guys, I'm not trying to make you mad per se or all that kind of stuff. I want you to succeed. But I'm trying to just drill this in, man. You've got to break on through to the other side. So anyways, like I said, peace on earth. May the pips be with you. May your profits be above average. Adios, muchacho.